Hi guys, welcome back to TETrading and episode 2 of my beginner investor series. Last week, you'll see in the card there was the difference between trading and investing. And now if you decided you want to go into investing rather than trading, this is the video for you. So we're going to go through how I would invest. Not necessarily how you should invest. You should always do your own homework and not rely on anyone else, but how I would invest if I was to start again now, knowing what I know with the portfolio I have at the moment, how I would invest my first £1,000 or dollars or whatever amount you've got into the stock market to put it to work. And this is going to be focused on dividend investing really. So let's get straight into it. So I'm going to be using Seeking Alpha for this today to give you the facts and figures. So company number one, no, that's not it. Company number one is going to be is an index fund. So the Vanguard High Dividend Yield ETF. This is an index. This tracks or holds currently a lot of high dividend paying companies. You don't have to hold them. So not only are you going to diversify, let me just explain the £1,000. I'm actually going to break into 4 separate holdings and not put £1,000 into sort of one position. You don't want to be putting £1,000 into the stock market into one position and that's it. If you are going to do that, an ETF or an index fund like this is probably the safest way to do it, because this index fund then holds lots of separate companies themselves. So it's a safe way of diversifying your money. But we've got number one, Vanguard High Dividend Yield ETF, and then I've got another 3 companies that I'm going to be putting the money to work into to create a bit of a dividend income and put my money to work. So number one, you'd split your £1,000 up, £250 would go straight into a Vanguard High Dividend Yield ETF. That's going to further diversify your money. Company number 2, I'm going to rattle through these, so it's not a silly long video. So company number 2, AT&T, American phone company, phone provider, phone carrier. So let's go on to this quickly here. Massive dividend yield, huge 7%, which is amazing, and it's been paying or growing its dividend for the last 36 years, which is really good. So if you have a look at the history here of dividend growth, looking pretty solid there. So that's really good. So I really love AT&T. It's a big holding of mine. I've got it down here. It's just over $3,000 worth. So it's a big holding of mine. Really like AT&T, and over the years will continue to dollar cost average into AT&T. So company number 3, again, just going to rattle through these. Altria Group, one of my most recent purchases. Have a look at the I'll have the video up there of when I bought it. More recent for me. Dividend scorecard, let's take a look at this. So we've got a massive, nearly 8% dividend yield, which is amazing. But even better than that, it's a dividend king. It's been growing its dividend for 50 years. If you're just setting out into the stock market and you're investing your first £1,000, your first £100, your first 500 quid, your first 10,000, whatever it might be, you're really going to want to look for something low risk, solid companies that aren't going to give you anxiety, and you're going to be checking your portfolio every day to check where it is, has it gone down, and worry about it. Am I going to lose all my money? These are going to be, and certainly the next one as well, are going to be solid dividend payers, solid companies, and lower risk than if you were to invest in something like Bitcoin. I don't know. You can invest in Bitcoin if you want, but not my cup of tea. So this is how I would be doing it. I'm diversifying the money straight away with the index fund. Then we've got 2 solid companies, AT&T and Altria, who have been paying dividends for a long time. and it's got a monster yield as well. I mean, that's just phenomenal. So I'm going to be buying loads more of this in the years to come. And the last company that I would invest my next 250 quid in, and then that's done. That's your portfolio. You've got 4 holdings. Is Procter and Gamble. I'm sure you know Procter and Gamble. I'm sure everybody must know Procter and Gamble. I mean, it's such a well-known company. Smaller dividend yield, but they've been paying or growing it certainly for 64 years. So again, really safe. You can't go far wrong with these guys. And then as you add more into your portfolio in the months and years, then you can diversify a little bit further by a few more companies. So you've got a bit more safety surrounding the portfolio. I'll give you an example. If you were to throw £1,000 straight into a one company, and that's your portfolio. Full disclosure, I bought shares in Luckin Coffee at the end of March. So if we look down here, I bought literally the 31st of March. That's when I bought these shares. It had come down a little bit, but it was picked to be the next Starbucks. Massive company, coffee company over in China. Huge levels, huge amount of coffee shops. And literally 2 days later, a scandal came out that the sales figures were being smudged, and I lost 90% of the value of the investment. So that's a good example, a real life example. It's literally, you can see it here on the screen. I've literally got into it at the $26 mark, and it straight away dropped down to like $1.08, $2. So that's a live, that's a real time personal example of why you don't want to be putting all your money. And I put £250 into this. You don't want to be putting all your eggs in one basket, so to speak. You're not going to put your £1,000 straight into one company, because if something like that happens, it's not good. So the first company obviously is an index fund. That's going to help diversify your portfolio even further. And then we've got 3 solid companies in the form of AT&T, Altria and Procter & Gamble. You can't do any wrong with those. And you see a lot of YouTube videos that are buy and hold forever stocks. These are them. Procter & Gamble definitely is. Altria, they've been increasing their dividend for the last 50 years. I'd argue that's definitely one of them. And AT&T is just a quality company with a big yield. So guys, I hope that's helped with any aspiring investors. As always, as I said, do your own homework. There are a lot of companies out there that will provide an equally good portfolio. That's just how I would do it from my experience. I own 3 of those anyway. I own 3 other Vanguard index funds, not the high dividend yield one, but the S&P 500 total stock market index fund and the REIT. So this is all just what I would do with my £1,000. I would be buying income, especially when you've got some 7% and 8% yields in there. Your £1,000 in this specific portfolio, this £1,000 would produce £52 as of right now with these yields, would produce £52 a year in dividend income. So your £1,000 has just bought 50 quid a year in income. So you're buying income, but you're also getting your money into the stock market and putting it to work, and you can just leave it there. And in years and years to come, you'd hope that the value of them has risen as well. So I hope that's helped. Like the video, subscribe to the video, comment below your favourite buys for good, solid dividend returns and good dividend income, safe companies. So there'll be some more dividend kings in there, I'm sure. So comment below what you'd be looking to buy. That's how I would allocate my first £1,000. And yeah, hope that was helpful to you guys. I'm going to end the video there. I'll do another video next week with possibly I've just broken £175 a month in dividend payments, which is amazing for my portfolio. I may do a video on that next week. So comment below if you'd like to see that, or an entire breakdown of my portfolio, which is here. So like and subscribe, comment below, Share this video with a friend if you feel like you've got a friend that needs a bit of help as well. And I'll catch you guys in the next video. See you later.